We're gonna have fun.
Oh boy.
That's great.
I am Sarah Asay. I'm with Trevor here of Asay Realty, and we are here with Justice Roberts of Renown Mortgage, and we're just going to ask some questions, learn more about your business and how things are going in the mortgage industry right now.
That's great.
Yeah. So tell us basically what a loan originator does.
So a loan originator is responsible for understanding loan guidelines, loan programs, and kind of pairing those with each client specifically. So, I mean, it's understanding probably the four main pillars of finance, which is income, assets, credit, but then also one that people don't talk about a lot is collateral. The type of property that somebody is looking to get, whether it's a single family property, a condo, manufactured home, whatever that ends up being, and kind of pairing those together. So that's what a loan originator does, is they're obviously responsible to connect with clients, but pair them with financing, applicable financing options for that type of property that they're looking for.
That is so cool. Okay, so what's involved in getting a mortgage for a home buyer? I know on our end what I send them to you, and then what happens next?
So, I mean, typically it's the discovery process of having a conversation, really exploring. I'd say typically what isn't a formal part of the process, but it's really understanding hopes and dreams. Like, what are these clients actually hoping to accomplish? Because mortgages are the means, like they're what people need in order to accomplish their goal. But it's important to really have a firm understanding of like what somebody's actually hoping to accomplish before we dive into the process of like, oh, what loan program should we go through? Because understanding what they're hoping to accomplish in their financial situation in detail is, I would say, is a huge part about what makes us different as we move through the process, and really, I think, creates the right experience for clients. Because if you jump in too far too fast for what's my interest rate, what's my loan program, without fully understanding, okay, why are we doing this home in the first place? That's just a huge foundation of what we do.
Mm-hmm. Cool. So something that's come up a lot for us lately, and I want to know what you have to say about this and how you could help our clients, is we have either a client who wants to buy a new home, they already own a home, they want to buy a new one, and they need to sell this one in order to buy a new one, or they'd like to hold it and turn it into an investment property and rent it out and then buy their new home that they'll be living in. What's the process there? What's the best way to get them started?
Yeah, there's a few different ways that you could think about doing it. Obviously, there's if someone's looking to sell a property, they can obviously sell that property first and put it in and then move into their new property. But that proposes quite a few challenges, either for the seller to accept that offer or just, logistically to get from one house to the other. And so depending on someone's financial situation, there's a couple of different strategies. What I would talk about specifically that I think talks to most people is bridge loans. And it's temporary financing that we get for the purchase of their new property without the sale of their house, with the understanding that they are going to sell that property, pay down or pay off that bridge loan, and then be able to get into that new house. So it's doing two loans versus one. So it's a little bit more expensive, but like to actually solve the logistical challenge and get offers accepted, make things so much more smooth, it's a great solution. And I mean, there's probably like 5 or 6 different bridge products that we offer that all work a little bit different. But I would say that would be like using the bridge loan scenario would be very, very common for someone who's wanting to purchase this property when they're selling. Now, if someone's going to turn a property into a rental and they're going to move into it, then they are likely going to need the down payment for their new property. And as long as we have that solved, could be equity in their current home that we could look at leveraging, or other liquid assets that they may have. But a lot of times the challenge is that they'd have 2 mortgage payments, right? But we can solve that by them having a lease on their current property, that basically they can have a lease that's like, hey, in 60 days from now, after I move out, I'm going to have a lease in place for $3,000 a month. I'm able to use that to offset their current mortgage payment so that they can actually qualify for their next home purchase.
That's really cool. I know we've actually done that for a couple of homes. So it's such a great way if someone wants to have rentals, for them to be able to buy one and continue moving forward with not having to live in a rental, but have their next new home.
Totally.
So that's
Grow,
so cool.
grow that real estate portfolio.
Yeah,
Yes.
yeah, naturally, without having to put 25% down, you can do the 3.5 to 5%. And
100%.
Yeah,
What
right.
I tell clients is the best way to get it, your first investment property is to buy a new primary. And if you can do it that way and structure it that way, I think for people that have, their family's growing or whatever, it's like, hey, get a rental by putting 5% down on your next primary residence. And then that's how you get a rental without having to have 20% down.
Yeah, so great.
All right, Jessica. So give us like 2 or 3 basic things that we should think about when we're looking to buy a house with a mortgage.
So, man, you could take that a few different ways. I'd say from a financial perspective, I'd focus on budget. Like, I think that that's really important for people that are getting into purchasing a home, is really understanding their budget, which can take, there's many different variables to what that looks like, but having clarity around that based off of where their income's at, where their income is forecasted to go, what their family's looking like. And I'd say the other piece that is more on the real estate side, which would be location and the type of property that they're looking for, and kind of the blend of how that comes together. Those would be the things as a home buyer, somebody looking to purchase a house.
Do you have like a rule of thumb, like X% of your income should go to house? Because you don't want to leave people house poor, right?
Yeah, I'd say my maybe unique perspective on this is everyone has a different situation and different financial, wherewithal for what they can afford for that. And I think my job as a loan officer and my fiduciary responsibility is to put somebody in a good position. And what certain people are able to handle, or what people are able to actually report on a loan application, may not fully be supportive of what their overall financial situation is. Maybe there's another family member who has other income that we're not factoring into on the application, or they have bonus income or commission income that I can't add in on the loan application. So I'm not very firm as far as what that looks like, but I am incredibly clear, again, to my point earlier about budget, to really have a conversation and do you actually understand what this looks like for you financially? How does that work? Now, most cases, I'd say with my clients that their budget is typically less than what the bank will qualify them for, which means we typically have room for them to push their budget as far as they feel comfortable.
Mm-hmm.
And then it becomes, again, my fiduciary responsibility to go, hey, what can you actually qualify? Like, you qualify for the moon and the stars, but what actually works for your situation?
Right.
And how can we make sure that we're thinking about that ahead of time?
Let me ask you this. What do you feel like is the main challenge in your industry right now and with buyers in general?
Buyers in general, I would say, is affordability. And I can't tell you how many times in recent weeks and months where it's like home prices are high and interest rates are high. And it's like all of that, really what we're saying is that affordability is a challenge. And I completely agree. And there's strategies and there's things, but I think it's a very real part about where our market's at right now is home affordability is a challenge. It's taking, multiple people on a loan application. You have multiple income earners in a home just to make things work based off of how expensive groceries are and a mortgage and everything else. And so I'd say that's the biggest challenge.
Okay, so how early should someone talk to you about getting pre-approved, and why does that matter? Oftentimes, I know that we have buyers that come in and say, well, I'm still a ways out. Curious what you have to say about that.
Yeah, without fully understanding the situation, I typically say, having a conversation even a year before you end up purchasing is not a bad idea. Now, I would say with some people, it matters less, and other people, it matters quite a bit more. And from my perspective, having a conversation with someone like myself earlier on never hurts. What is the downside of having a conversation to figure out where you stand, what your options are, even if it's a year in the process? I'd say our industry may not do the best job of helping clients not feel pressured into making a decision. And so they feel like if they're going to have a conversation with the lender, then I'm doing this thing right now and I have to have, everything in order. And there's all this stress and response from that. And I think, what I would hope is, conversations like this that would help people feel more comfortable. I'm having a conversation with another human being who understands what this looks like without maybe the pressure to make a decision right today. It's just really to understand my options.
Right. And that's why we've always felt so comfortable sending people to you, because I know that it's not going to be like, hey, you have to buy a house right now. It's more like, hey, this is a consultative process. This is what the application looks like. This is what underwriting is. Like you have, or you'll talk people through their numbers. Because I think a lot of people just think rate and that's it. But there's so many different ways that you can structure a loan. You want to talk about that a little bit? First, like everybody wants to talk about rates. Give us an overview. Where are we at? Where do you think we're going? But then beyond rates, like talk about some of the rest of the picture of how you guys structure the loan.
Yeah, I would say the biggest thing that differentiates and is kind of what you're talking about is what I would talk about is that I own and have a mortgage practice. And that is much different than just being a mortgage salesperson. And I think as we're talking about understanding the market and understanding that, to your point exactly, it's a consultative approach. And so I think if you think about your doctor, when you go and you sit down with your doctor, that's a much different experience than if you're going to someone who's like, I mean, maybe even a dentist, but like somebody's like, hey, like we got you in the chair, let's sell you on getting some brand new, teeth. Like that would be different than like sitting down with your doctor and you're going like, hey, this is what's going on in my life. This is what's going on in my body. Like I want to talk to you about it. And it's not like, cool, like let's pull out the knives and, the hammers to like go to work on you right now. It's like let's, there's a lot of questions. There's a lot of a process of consultation to get to the point of like, okay, now we understand your situation. So we can make our, determination on like, hey, here's what makes the most sense for you. As it relates to the market, to the other part of your question, I think that, interest rates are trending in a good direction, but they are still at elevated levels from the past years. And I think right now is such a great opportunity for buyers because we are seeing more inventory that's on the market. And I'm doing the best that I can to encourage people that are financially prepared to actually take that step. I think this is the best opportunity, especially for first-time home buyers, that they have or will have over the course of the next couple of years and that they've had over the course of the last 5 to 10 years.
Yeah, I mean, like inventory has tripled, right? We haven't seen this much inventory since 2018, 2017. But I'm with you with affordability. I mean, it really puts people in a hard position. So, you guys have a challenge to figure out how to fund that. You mentioned like having other people on the loan, having different loan programs, things like that.
Totally.
Okay, so what can someone expect when they work with you and your team compared to some big box bank?
I think one of the main things that you're going to get is just like someone who's really, really close and relational with you. And I think, it's going to be more like interacting with a friend than it is like somebody that you're going to have just a transactional relationship with. I'd say that would be something to expect. Also, I think options and solutions. And I can't tell you how many times I've talked to clients that have been other places before coming and talking to me. And it's like, oh, I didn't even know that was a thing. I didn't even know that was an option. And some of it is because, as a mortgage brokerage, I don't just represent one bank, I represent a bunch, which means from a term perspective and from a product perspective, I have way more options than your average lender. At the same time, I'd say even product and term specific, someone having our interaction with myself and our team going through the process, it's way more of a personal process.
That's so cool. And that has been our experience working with you. We've had people come to us working with some shall remain unnamed, big corporate places. And then when they work with you, the experience is night and day different. So, what's one thing buyers should avoid doing once they're under contract for a new home?
Probably the top of the list is quit their job. And unfortunately, I'd say that we do a pretty good job about having conversations with people, but it's happened enough times in my career. That's probably just the first thing that stands out. Don't do that. Don't open up new loans. Don't deposit.
I was going to say, buy a truck.
Yeah. Don't buy a truck.
You can tell we've seen all these things before.
Yeah. So this stuff has certainly come up. We've gotten better at having, those types of, hey, I know you weren't going to do this anyway, but let me just tell you a few things that we shouldn't do, and having those types of conversations up front. So it's really just to protect the experience. And I take a huge responsibility for the client satisfaction through that process. It's not just, hey, let's just see how it goes for you. It's like, no, I need to chart the path for you and make sure you know what steps to take and what steps not to take.
I love that.
So where can people find you if they're interested in getting a loan or starting the buying process? What's the easiest way to connect with you?
There's a couple different ways if you want to interact with me on social media. I'm at Justice Loan Officer. So that's an easy way. And then my website, mortgageteamjustice.com. We have live interest rates that we publish that are active 24/7. So if clients like want to go look for a purchase or a refinance scenario to price that out or to take a look at that more than, people can go do that too.
Awesome. That's great.